Hello and welcome to another Views from the Veranda. Well, everyone seems to be talking about a downturn in the real estate market at the moment, but you've got to remember that we're coming off the back of some very solid growth over the last 5 years. So in some respects it might be called a correction rather than a downturn. So we use a group called Cotality, which actually is a research property data company, which actually has tracked what would happen if it was a 5% decrease, 10%, 15% and 20% decrease, to give you an idea of what's been happening. So in the market at the moment, in the Sydney market particularly, we're tracking at around about a 5% decrease in property prices. So that is at its peak. What that relates to is that even if it was a 20% decrease, it would bring it back to values which would have been effectively in May 2021. So there's been quite a lot of growth since the pandemic. So that a lot of that effect in terms of what's been happening with the market has been around affordability pressures, mortgage serviceability, especially with increase in interest rates, cost of living pressures have been coming into play, and more recently investors have exited the existing residential market because of the changes in the property tax that's actually happening. But in some respects, supply and demand continues. So just to give you an idea of the market at the moment in the Australian market, the Australian housing market is worth $12.4 trillion over 11.5 million households. So that represents something like close to 60% of our household debt and wealth. So Australia's home value index in July dropped by 0.7%, but as I mentioned, overall it's about a 5% decrease. And there's been monthly declines since, in fact, December 2022. National sales volumes are down, so the number of properties are selling over the last year, and we're expecting that to hit something like a 20 to 25% less property going on the market this year. So that affects supply and demand. Home prices, in terms of how long they're on the market for, they've actually now working out at an average of 35 days to sell, which has actually been an increase. And vendor discounts are hitting at about 4%. So when people drop their prices, they're able to track that as well. Auction clearance rates obviously have been coming down. They're around 66% in February. Now they're tracking at a low of something like 40 to 45%. So that's signaling a weak supply and demand. But interesting enough, rental growth. Rental growth is up by 5.9% in July and that's outpacing wage growth, which is at 3.3%. So look, there's a bit of a snapshot of what's been happening in the market. It is a correction, it's not a downturn. So if you'd like to know more about what's happening in your own property, your own area, contact us, message us. We're here to give you the best advice the Shire can provide. But until next time, take care and look after each other. Thank you.